Good morning, everyone. Welcome to our live daily market outlook prepared by Windsor Brokers. Another nice day, nice and sunny day here in Cyprus today. We are in Thursday, 30th of August 2012, the day before the end of the month, with some more action, I would say, expected today due to a quite busy calendar and, of course, ahead of tomorrow's Jackson Hole's central bankers meeting. That is basically the focus of this week, with the most of the instruments treading water during past couple of days, awaiting the decisions and possible hints of Big Boss Mr. Bernanke, who might give some hints of possible release of quantitative easing in number 3. That is well awaited, and the possibility of this is I would say at this point 50-50, but it will be quite welcomed by the markets as United States are still, despite some good signals, still showing no firm signals of stronger recovery of the economy. As said, most of instruments are holding sideways mode, with euro holding under its recent 7 weeks high at 125.88, basically entrenched between 124.64 and 125.88. Range, narrowing the range in past 2 days, awaiting some releases. Today is important is also the German unemployment due a bit in approximately 40-50 minutes. That is widely expected to stay unchanged. More of this, of course, will give our technical part, with the sterling also holding above important 158 level, but still below important 158.70 barrier, break of which is seen as a trigger. So quite narrow range and sideways movements, and a similar situation with the dollar yen that after bouncing from 78.27 low holds range between 78.44 and 78.80. The recent peaks again in the again in the sideways movements. The dollar Swiss again the similar situation, consolidating recent losses above 95.37 last Thursday's low, within 95.37 and then 96.34 100 pips range. Again more sideways movements ahead of tomorrow's. Most of the market, as said, are expecting and awaiting tomorrow's Jackson Hole meeting and possible releases from Fed's President Ben Bernanke. The crude oil came under increased pressure, despite positive signal was that Hurricane Isaac hit finally the coasts of South Louisiana, but no bigger impact as the New Orleans, of course, after 7 years ago, the Katrina made some measurements, and it's quite well fortified, with no bigger impact on the refinery plants. From the other side, unexpectedly high build in the U.S. stockpiles, U.S. stocks, weekly stocks yesterday, with the raise approximately 3.8 million barrels compared to 1.5 million barrels draw forecasted, keeping the pressure on the price. From the other side, as said, the supportive for the oil price is still maintenance and the North Sea, and the possible strike in Norway's oil sector are still curbing the losses of the crude oil, still holding above its recent low at 94.40, but near-term tone is still skewed towards the downside. Gold is also within the narrow range. Again, slightly more pressure seen towards the downside than the recent low at the recent low at 1652. Currently holding around the 1657, moving basically within the narrow range 1660 and 1650 on the downside, but overall tone is still rather negative, and of course more of this again we will see in our technical part. Let's now take a look at today's calendar that is quite busy as always. On Thursday we have a full calendar starting 7:55 GMT. The German unemployment rate for August expected to stay I do apologize unchanged at 6.8%, as a good signal that no further slowdown in German economy, along with yesterday's releases. More economic indicators are seen today from UK at 8:30 GMT. Net lending for July is expected to go up to 1.1 billion pounds compared to 300,000 pounds in the month of June. M4 money supply for July is again forecasted to improve to 0.4% compared to minus 1.6% in June. And mortgage approvals are again seen higher. 47,000 is July's forecast compared to 44,000 in the month of June. Eurozone consumer confidence is due at 9 o'clock GMT, with the forecast for today. We basically we don't have the I do apologize, we don't have the forecast. Minus 24.6 is the previous release. And from America's current accounting for second quarter from Canada due at 12:30. The gap is expected to widen to minus 15.1 billion Canadian dollars compared to gap of 10.3 billion Canadian dollars in the first quarter. U.S. weekly jobless claims. Today's forecast is slight decrease. 370,000 is forecasted compared to 372,000 in the previous week. Personal spending is expected to improve. 0.4% is today's consensus compared to unchanged the previous one, while personal income is seen slightly lower, 0.4% compared to 0.5% release in month of June. Core PCI price index for July, again slight decrease on today's forecast, minus 0.10% compared to 0.2% in June. And finally, the UK's consumer confidence late in the afternoon for August expected to show slight improvement, though still quite negative. Minus 26 is today's forecast compared to minus 29 in the July's release. Group of data that are due to be released in late and close to the end of the day. Basically on the GMT it's from 23:30 GMT, manufacturing PMI household spending and employment rate that is expected to stay unchanged, as well as Tokyo's core CPI for August expected to stay unchanged. I think we're going to have more look at these releases on tomorrow's session. And now we are going to see again our technical part and the currencies. As said, no significant changes and no significant movements ahead of tomorrow's central bankers meeting, and some important releases today. But as said, the main focus is still on tomorrow's meeting. Mario Draghi, President of European Central Bank, will not be present there due to increased duties at home as they are preparing the beginning of September ECB meeting. So he cancelled his presence at the Jackson Hole meeting, while all the others will be there. And of course, as said that at the beginning, main focus is on this event. As said, during past week, Euro was moving within the 125.88 and the 124.64 range, quite clear sideways movements, no direction at this point, following a recent 1 month rally from 24th of July low at 120.42 that peaked at 125.88. Technicals on the daily chart are still positive, but with current movement seen as consolidation, but lower time frames are showing some more negative tone, and see the downside still quite vulnerable as repeated attempt higher 2 days ago failed on approach to 125.88 at 125.75, and then continuous slide lower, found support so far just above 125 handle. More sideways and the more narrowing range, I would say, will be seen at least until today's releases, but most likely until tomorrow, when some more action would be seen. A break of either side of the range will define the near-term direction. As said, quite weak structure on 1 and 4 hour charts. Still see more potential towards the downside, more risk, I would say, towards the downside, with the loss of 125 level seen as a trigger for possible revisit of the key short-term support at 124.64, and basically a break of this level that also marks 38.2 Fibonacci retracement of the latest uplift from 122.54 to 125.88 would be trigger for fresh weakness and will confirm a formation of a double top pattern on the shown on the 4 hour chart, with the levels seen on the downside in case of a break lower 124.20, 50% retracement, and then we have 124.00 as a round figure support, and the more significant 123.80 previous highs and 61.8% retracement. On the upside, the alternative scenario sees a break above 125.88, 126.00 to open levels towards 126.80 and 127.00 seen as the next upside targets in case of a clear break above this key short-term barrier. And of course will open, this also marks 38.2% retracement of the larger down move, 134.85 to 120.42 will open way for a stronger recovery of the single currency. Otherwise, any failure under levels 127 would be seen as a risk of creating a lower top as a part of the larger downtrend. So far, more support is seen for the single currency for a possible break higher. Of course, a lot depends now on the tomorrow's releases and the plans of Federal Reserves, as further quantitative easing would likely make the dollar cheaper and will be a great boost for the single currency and other opposite instruments such as sterling and yen, as well as Swiss franc. As talking about sterling, also moving in the sideways in the past couple of days following the corrective action of 157.53 2 days ago. Low as upside stays capped at 158.54, still below 158.50 that marks 61.8% retracement, and 158.68 peak of 24th of August, despite the studies still being slightly skewed towards the upside. Rather neutral to positive tone is seen in the near-term price action. As said, we need to see break above initial 158.54 and the 158.70 barrier in order to resume this near-term recovery. Otherwise, initial support at 158.20 and the more significant 158 zone, loss of which would again reattract lower boundaries of the current price action, with the key support at 157.53 in the near-term movements, along with the trend line support that currently stands at 157.73. This is the trend line drawn of low of 2nd of August at 154.89. Ability to hold above these levels, especially 158 and then 157.70 trend line support, will keep the focus turned towards the upside, as hourly studies are 4 hour studies are still slightly above the midlines, but lack of momentum is seen as long as pair stays under 158.70 level, seen as a trigger. Hesitation also seen on the daily chart following a latest break above important 200 days moving average and the recent range top break that with gains being capped so far at 61.8% retracement at 159 zone, and basically clearance of 159 is required to resume the larger uptrend from 152.67 1st of June 2012, yearly low and open levels towards 160.00 seen as the next target and strong psychological resistance. And also similar situation with the other currencies, as dollar yen is still treading water within the narrow range, 78.44, 78.84 on the upside, 40 pips range, no direction at this point, with studies being rather flat in the lower time frames, but still a slightly more negative tone, I would say, seen on the 4-hour chart, as descending 55 days moving averages, exponential moving averages, still keeping the upside limited, reinforced by a recent peak where it's 38.2% Fibonacci retracement of the down leg from 79.65 to 78.27. A break of either side at this point would give us more idea about next future near-term direction of the euro. As set initial support 78.44 and 78.27, loss of which to open a key support zone at 78.15, 77, pardon, 90, 78 zone basically as a base, and a strong support, the loss of which would be possible trigger for a test of key short-term low at 77.65, low of 1st of June, as the pair remains in the, I would say, 3 months consolidative mode following the sharp decline from 84.17, the peak of 2012, posted on 15th of March 2012, with the break below important 78 base to open 77.65. On the upside, regain of 78.80 and 79.00 with 79.12, 61.8% retracement. This point is required to turn the near-term focus higher. Still no direction in any of the time frames. Most of the studies are rather flat, so most likely some fundamentals and news will be the main driver of the dollar yen in the near future. And finally, dollar Swiss 6/10, its recent downtrend of 99.70, peak of 24th of July, as the daily Ichimoku cloud base held the downside protected for a while from nearly 1 week. Recent break lower and posting a fresh low at basically returning down towards the levels of 95.37. That is the recent low, with the current movement seen as a consolidation of the recent losses, but still a negative tone that dominates on the larger time frames, still sees more potential towards the downside. On the upside, immediate resistance is 96.34, 2 days ago peak, with the 97.00 zone where is the descending bear trend line of 99.70 seen as a trigger and break above 97 would ease the current still bear pressure on the larger picture and prevent pair from further sliding, with the downside target seen on a loss of 95.37 at 95.00, approximately 50% retracement, and another two important static supports at 94.61 and 95.20. Hourly structure is neutral, I would say, at this point. No significant signals or movements, as the pair bounces slightly from its just 2 days ago low at 95.46, but 96 barrier as psychological resistance, and the 61.8% retracement of the latest down leg from 96.34 to 95.46 still stays intact, and the only break here actually would move the near-term structure more into the positive territory. Alternative scenarios is loss of initial supports 95.60, 95.50 in order to trigger a return down towards 95.37 for possible resumption of the larger downtrend. 4-hour structure, despite indicators slightly pointing higher, still sees no much prospect towards the upside, as near-term action been capped by 20 days exponential moving average in the past from yesterday, while the larger picture still shows 55 days descending exponential moving average currently at 96.20, maintaining the past 1 week descent of 97.66 high of 20th of August 2012. Again, the pair awaiting, like all the others, tomorrow's meeting to possibly give us some more ideas and define the near-term direction. A similar situation with the yellow metal. No significant changes pardon, from our yesterday's update, as 1650 slight extension seen yesterday to 1650. This is seen as our good support with the 55 days exponential moving average currently standing at 1651, still keeping the downside protected, but for our structure it's quite negative at this point, and this is basically more prospect of further retracement of the latest strong rally from 1590 to 1576. A loss of 1550 as important support opens another significant support zone at 1643 that marks 38.2% retracement, as well as top of the previous range that lasted from beginning of June, and basically only loss of 1640, 1630 levels would be quite risky, as that will bring the gold price back into the previous range. On the upside, immediate resistance at 1670, 1672 and 1676, break of which is required to resume higher. 1689, 61.8% retracement, and 1700 as round figure support are seen as the next targets. Overextended conditions on daily chart, again to mention, still warn of possible stronger reversal with 1643. Again, as I mentioned, the 1640 quite a strong support zone, where is also 200 days moving average so far holding. The price holds above, loss of which would be quite good indicator for a further easing towards the downside. That was all for today from me. Your turn now for questions and answers. Okay, we have a question for Aussie dollar, US dollar. It's been a few days to see this instrument. Remains in the short-term downtrend of 106.12, 9th of August peak. Steady down move as the latest attempt higher has been limited at 105.43, and since then the pair is descending 103.15 since so far. Significant was a loss of previous low at 103.44 posted 2 days ago after upside failure at 103.97. 104 was quite a strong barrier and kept the upside limited, along with the descending 20 days exponential moving average, with loss of this level that also marks a 61.8% retracement of the up leg from 101.75 to 106.12. Also the daily 55 days moving average that has been taken out. The pair is now basically attempting at very important 103 zone, approaching the actually 103.15 seen so far. 103.09 is the 200 days moving average, and the loss of this support would be quite risky for the pair, as that will be a possible trigger for a deeper reversal with the 102.25 pardon, 102.12, 38.2% retracement of the broader up move from 195.79 to 106.12 seen as the next target, along with the static support 101.75, where is also 90 days moving average. On the upside, immediate barrier at 103.44 and more significant 104. Basically, I would say is firm break above 104 and would be providing the temporary relief and prevent a near-term price action from further slide. But I would say at this point nothing significant to be expected as long as 105, what is the bear trend line and trend line resistance stays intact. Otherwise, any other movements would be just seen as the corrective action. A break above 105 and 105.40, the previous top, would again turn the focus higher and bring 106 zone back into focus. Any further questions? No? Okay, in this case, I would like to thank you all for being with us and expect you tomorrow when we have a big day and the whole week awaited meeting of central bankers. Of course, expected to have some more action. We are back at the same time, 7:00 GMT for tomorrow. We expect to see you again. Until then, I wish you a nice day and very successful and profitable trading. Good luck.